U.S. customs agents stationed at American ports of entry begin collecting duties on a wide range of Chinese goods, a list that covers more than 800 categories: farming equipment, industrial machinery, medical devices, and some car and airplane parts. Together, they're worth some $34 billion. U.S. President Donald Trump insists the tariffs are necessary to level the playing field. He says China's trade surplus with the U.S., which stood at $375 billion last year, is unsustainable and unfair to the American worker. Trump has also accused China of stealing American intellectual property and says the tariffs are in part a response to that. An estimated 99% of the items being taxed are supply chain goods, meaning parts that go into a bigger product, often one made and ultimately sold in the U.S. These new tariffs are on top of the ones the Trump administration slapped earlier this year on metal imports, not just from China, but from several of Washington's Western trading partners. And the retaliation has already begun. At this rate, if this conflict escalates into a full trade war, it'll likely be one fought on multiple fronts. Roee, Ruttenberg, CGTN in Washington.
I'm Zhao Yunfei, covering the trade tensions from China. China has said it doesn't want to start a war, but will fight till the end if forced to. Trump also threatens to levy tariffs on Chinese goods worth $500 billion US. That's almost the total volume of Chinese exports to the U.S. China's Ministry of Commerce said Thursday that the U.S. is bullying other countries.
The United States is coercing other countries, swinging the stick of tariffs all around the world. It's an act of trade hegemony that goes against the tides of our time.
After Washington laid out its China target list in June, Beijing slammed the move for violating global trade rules and threatening its national interest. China swiftly issued its own list. 25% taxes will be slapped on $34 billion worth of U.S. goods, including agricultural products, cars, and marine products, starting Friday. Another $16 billion will go into effect if the U.S. continues with its tariff increase. They will cover chemical goods and medical equipment, as well as energy-related products. Chinese Foreign Minister Wang Yi, now on a visit in Austria, has urged the U.S. to stick to trade rules.
Resorting to trade protectionism is evidently a short-sighted act. It hurts others and is self-harmful. Such an act violates WTO rules and damages multilateral trade systems. Worse than that, it will overshadow the momentum of the global economic recovery.
Beijing and Washington have had several rounds of trade talks in recent months. In May, they agreed to call a ceasefire. Beijing said it would significantly increase purchases of American products, but Trump later backtracked and decided to go ahead with the tariffs. Zhao Yunfei, CGTN, Beijing.
All right then, so let's bring you up to speed with the latest on this from Daniel Rangers. He joins us now live from Washington, D.C. Daniel, good to see you. So China's counter tariffs, they target mostly agricultural goods, cotton, sorghum, soybeans, that sort of thing. How have producers of these commodities responded to the developments over the last 24 hours?
Well, if you look at the prices, when it was clear that the US and China were unable to reach a deal back in May, the prices of agricultural goods plummeted in anticipation, I think, of this moment. So let's take soybeans as an example. Soybeans is a massive industry, and China is a major customer of US farmers. And right now, the price of soybeans is around about $8.64. Now, one study by the University of Illinois suggested that the break-even price, the price at which it goes from debt to profit with soybeans, is around about $10. So you can see that despite the fact that the vast majority of rural areas is generally supportive of President Trump's policies, nonetheless there is a growing undercurrent of concern, particularly among farmers, that whether this strategy will actually work. So they say, well, maybe it's worth giving President Trump a chance to negotiate and play hardball. But on the other hand, it's starting to hit my bottom line very hard. And if this strategy doesn't bear fruit, it could be a major political problem for President Trump going forward.
Indeed, especially with the midterms coming along. But both sides are not talking to each other at this point in time. So from the American perspective, what exactly is the end game here? How does the White House see this playing out?
Well, you know that President Trump looks at trade deficits as a big issue. They see these $375 billion US dollars per year trade deficit as being not only a problem, but a point of leverage. So they say, well, the US market's pretty big. China sells a lot more products into the US market than the US sells into China. Therefore, at some point, they're going to run out of cards to play. And therefore, we can continue to threaten tariffs. And at some point, they're going to have to back down. I think that assumes a relatively simplistic zero-sum game on the trade front. There are other ways in which China could inflict a lot of pain on US corporations. So within the corporate community, there is a great deal of concern that President Trump's strategy relies on an assumption that is very risky and also may not have the desired effect on China in terms of leverage that he imagined.
Indeed. At about $68 billion, though, we're talking about a fraction of the total bilateral trade between the two sides. But what damage is likely to be inflicted by the tariffs that are in place right now?
I think it's worth reflecting on the fact that we have very low unemployment in the United States. The economy is in a good place. So any actions taken now will have a lag time. So we don't know what exactly the impacts are going to be. But it's worth pointing out that this is not just an isolated thing. President Trump is threatening to tear up the NAFTA agreement. He's withdrawn from the TPP. He's having a trade fight with Europe over steel, aluminum, and now autos. This is a global fight that he's getting into. And I think the major effect is that investors, both in the United States and across the world, are taking a rather dim view of this because what they need is certainty. They do not want this sense of chaos. They want to know that deals have been done. They want to know what prices they're going to have to pay at the borders. This isn't happening. So there's a potential for a global investment to dry up in the face of so much uncertainty.
Indeed. The next wave of tariffs, because we know they are coming, that covers about $16 billion worth of goods. What will it target, and why were these separated from the original plan, pitched way back in the first quarter, of imposing tariffs on $50 billion worth of imports from China?
Yeah, so you had a $50 billion threat, and there were, I think, 818 different tariff lines. Those are sort of categories of things that are imported into the United States. They then did an investigation, asked US companies and others to come forward to see if it would damage the US economy. They got rid of a bunch, and then they introduced a whole lot more. So that whole lot more bunch of tariffs worth, so we got 34 billion imposed now, and then 16 billion to make 50 billion in the end. That 16 billion is still being looked at as how it would potentially damage US economic interests going forward. So it's a sort of trickle-down effect from their process of investigating each potential tariff to see if it would damage. Clearly, all tariff lines would have an impact, but this is part of a process that the Trump administration is doing to really try to target China on a broad-based level with so many tariffs that it would have a rather mild effect on the US consumer going forward, because everything would be just a bit, as it were.
Indeed, but let's assume, for the sake of argument here, that the next wave of threatened tariffs, including the ones that the president has threatened on about $200 billion plus of imports, assuming those do go into effect, when could that conceivably happen?
Well, the timing issue, as you iterated earlier, may end up being down to the US midterm elections. Just to reiterate, the midterms are very important to President Trump, because if he were to lose control of the US House of Representatives, which is the most likely scenario, he would then lose more control of his legislative agenda, and you would have the Democrats having more impact in terms of being able to block his legislative agenda. So now you could argue that a lot of this tariff threatening is to do with the fact that President Trump needs to demonstrate that he is a man of action to the American people, such that they are convinced that he's acting in their interest, whether that is true or not. So it could be down to a timing issue. We don't know. This threat is on the table because he wants leverage in the negotiations, but we don't know when those negotiations are going to take place. And another question to be asked is, what effect does the negotiations with DPRK have on the negotiating picture moving forward?
Indeed. One last question for you, Daniel, and you partially answered this a little earlier, but by some estimates, we're seeing economists projecting that this current dispute, this current wave of tariffs, might knock off about 0.1 to 0.3 percentage points of growth over in China. But what sort of damage are economists forecasting for the US economy, both in trade and in investment?
Serious economists are forecasting massive damage to the US economy. The Tax Foundation, for example, which is very reputable here in Washington, D.C., has done a series of calculations based on the tariffs that we have, the threatened retaliatory tariffs, and the whole picture altogether. Now, the whole picture altogether would, according to the Tax Foundation, reduce GDP by 0.47%, almost half a percentage point in the long run, reducing GDP by over $100 billion a year, reducing the wages, and reducing jobs, crucially, by 360,000. Those are only projections. We don't know how all of this is going to roll out. But even if what we have on the table right now is rolled out, most serious economists say it would lead to the loss of at least a couple of 100,000 jobs.
Indeed. Let's see how all of this plays out. Daniel Rengers there live in Washington, D.C. Thank you.